There is a need to always check your investment portfolio from time to time to evaluate and see where your investment plans are going. Good day, everyone, and welcome back to the channel. If you're tracking the Nigerian stock market, Q3 2025 earnings reports are dropping by the day, and we've seen some heavy hitters. Today, we are breaking down earnings for some of the key players that we've analyzed. We are looking at Aradel Holdings, Seplat Energy, Unilever Nigeria, Baker, and Chams Holding. Let's get into the numbers that matter: fast, sharp, and investor ready. This format makes it very easy to understand what is going on with the financial report without diving into the entire 100 or 50 pages that we have on the NGX. Before we go ahead, I would like to mention that this video is for educational purposes. It is not an advisory to buy or sell any of these stocks. These are just my own ideas about each of those stocks. It is not financial advisory. Consult your stockbroker, accountant, banker, solicitor, or any other professional advisor for guidance. Then lastly, always do your due diligence before buying and selling any of the stocks. So let's dive into it. The first we'll be looking at is Seplat, and you can go to my blog, Mintwise NGX blogspot, to look at all the numbers that I put out there. So in a snapshot, we're looking at Seplat Energy. They did deliver a blockbuster quarter. Revenue surged by 213%. Gross profit will follow suit, jumped by 155%. Operating profit rose 166%, and profit after tax was up 178%. EPS will follow all these numbers, and that is up by 145%. The only red flag that I see for Seplat for this quarter is that their net finance cost ballooned 181% when compared. And this is likely due to FX or debt servicing. We would have to take a deep dive at that. But they did. This is still a very strong quarter for them overall. The next one we'll be looking at is Chams. Flipping the page. Chams, of course, is in the tech industry. Revenue was very modest, up by 2.5%. The cost of sales outpaced it at 8.5%. We see gross profit falling 14%, and operating profit, of course, will follow suit, dropped 23%. The real kicker for Chams is that their net finance cost went up, exploded 327%, and this will drag down your profit after tax 53%. Like I said, your EPS will follow that same line of thought. EPS declined 52%. This was a very tough quarter. Margin compression and finance costs did hit harder for Chams. I would also want to point out that I'll be looking at how Chams is going to bring artificial intelligence to bed in their operation, looking at their corporate disclosures, looking out for news about them imbibing artificial intelligence to grow what they have. The next one would be in the pharmaceutical industry, which is Baker, one of the big players in that industry as well. They came through with solid growth. Revenue was up 35%, gross profit up 50%, operating profit, of course, will follow suit, so at 76%. Profit after tax climbed 77%. The EPS would mirror that, which is also at 77%. But our keynote here is that despite a 30% rise in admin and distribution costs, they have really managed to expand their margins despite this cost. So we can say they produce a strong and balanced performance in the midst of this. The next one would be Unilever. I'm trying to keep this under a few minutes since I have most of it on the blog already. Unilever, they posted a very healthy quarter this last quarter. We're looking at their revenue, which grew 43%. Gross profit was 31%. Operating profit surged 75%. Profit after tax, this went up 15%. Of course, like I've said severally, EPS will follow suit by 16%. What is our key takeaway from Unilever? The cost of sales rose faster than revenue at a pace of 52%, but they were able to keep their admin cost at very nearly flat at 2%. Their net finance cost also improved 66%, and this cushioned their bottom line. This is a very good quarter for them as well. I won't say fantastic, but a very good one. And the big one everybody's talking about, the oil giant Aradel. Where is Aradel? And here. Probably have not posted that. But for Aradel, on my notes, the revenue rose 43%. Gross profit was up 11%. Operating profit dipped slightly at 0.9% due to they have this spike in their admin cost, admin expenses, and this is a game changer because they, like I said, they've invested in several other companies. They had share from other associates surged for 90%. This is very big for them. Profit after tax almost doubled. That's 122%. EPS is up by 120%. Of course, all this will follow suit. So, despite this rising finance cost for Aradel because they are leveraged, they did grab a whole lot of income from their associate to deliver a very strong bottom line. So the big picture of what we're looking at, Seplat and Baker, they did deliver strong standout growth across board. Unilever, they did show resilience with margin control and finance gains. For me, Aradel mixed operations because they crushed it with their associate income. I would like to see more from them as individual game changers. Chams, they struggled with margin pressure and debt cost. Looking forward to how they can come out of this in the next quarter. So if you're an investor, always do a deep dive, look at the cost, look at the revenue, look at what's going on in the industry, FX exposure, and look at if they have associates contributing to their bottom line. Don't forget to like, subscribe, and drop your thoughts in the comments. Which of these names are you bullish on going into fourth quarter? Again, see you on the next video. Thank you for tuning in.